Hi, good evening, everyone. Thank you for joining the call. Mainly, we'll be talking about the PPFS gift, about certain myths, and the digital process. We have Mr. Nirmal Bari, Mr. Purvesh Pandit, Akshay Palgunia, and Himangini Thakkar, and rest of the PPFS gift team here. So, before we begin, I would like to read the disclaimer. Viewers, attendees of this meeting should note that the objective of this meeting is to communicate and share our thoughts and processes. It should be noted that views expressed here are based on information available in the public domain at this moment. Views expressed here can change depending on change in circumstances. Nothing discussed here constitutes a buy, sell, hold recommendations. Investments in retail schemes are subject to market risk. Please read the offer documents carefully before investing. Now I hand over the forum to Nirmal Bhai.
Good evening, everyone, and thanks for taking out time to join the call. First of all, before we start with anything, I'd like to thank all of you, the investors as well as partners who uh, made our both the NFOs, the Parag Parikh IFSC S&P 500 as well as the Nasdaq 100 funds NFOs very successful. We are, I would, we are significantly better off in terms of we have crossed all regulatory requirements in terms of AUMs and everything, and we have also gone live with further subscriptions. The NAVs are now being displayed on the website as well. Uh, while we have done a couple of calls in the past for this specific product, I would uh, understand that there would always be a few participants who are new to the product, and so we will very briefly take you through what is S&P 500, Nasdaq 100, why does it make sense to look at global investing and to invest specifically in this index funds, and then how have we structured the product and why this is the very good product for anyone to consider for their global diversification needs. So I'll hand over to Akshay first to explain a bit about the S&P 500 and Nasdaq 100 indexes. Then we can move it.
Yeah, so thank you, Nirmal. Good afternoon, everyone. So there is one very famous saying in the investment world, which says, "Don't put all your eggs in the same basket." And I mean, owing to that, a lot of people try to buy different stocks, buy different, invest into different sectors, invest into different themes, but still all their investments are in the same geography or same country. That exposes them to the country-specific risk. So, for example, in India, we had demonetizations, we had GST regime change and all, and there could be many natural calamities which are specific to one particular region, which exposes the investments to the country-specific risk. So, through global diversification, it actually helps us in reducing the country or region-specific risk and help us to generate risk-adjusted returns. Now, looking at the global diversification, it is better to blend the investments with the developed markets because it often lowers the volatility as the correlation between, let's say, Indian markets with the developed markets is generally low, and that's why it offers better risk reward. Even in the developed markets, if we see the US indexes, the S&P 500 and Nasdaq 100, they have outperformed different markets indexes over last 35 years. I mean, most of the times they have outperformed in dollar terms. And these indexes capture a very large part of the world market cap. If you see the current global market cap, it is around 120 or $15 trillion. Of that, I think S&P would be comprising 40% of it. So it covers majority of the global market cap available out there. Also, a lot of these companies are diversified. I mean, have globally diversified businesses. They are benefiting from sustainable or I would say stable growth rates in the developed markets, as well as decent demands coming in from the emerging markets or various parts of the world. And these companies might be domiciled in US, but their business, their cash flow generation, everything is very diversified in nature. Now, if we So if we see the compositions of both these indexes, so if we see the S&P 500, it is pretty much diversified. All the companies are allocated into 11 different GICS sectors. So IT is 34%. There is a financial which has a good allocation, which is 14%. There is a healthcare of 10%. There is consumer 10%. So S&P all in all is a very diversified index. Whereas if we see the Nasdaq 100, the technology allocation is 65%. So it is more like a innovation led indexes where the concentration of the technology is comparatively higher. Now let's look at the key differences between both these indexes. So it can help us in making decision on which kind of board we want to onboard ourselves. So S&P 500 is more like a barometer for complete US economy, whereas Nasdaq 100 act as a barometer for innovation and tech. So S&P 500 has almost more than 80% of the US market coverage. So I mean, investing in S&P 500 is equivalent to kind of investing in the US economy. If we see the common stocks, so 85 stocks of the Nasdaq 100 is also part of S&P 500. In terms of market cap, I think 50%, there is a 50% overlap between, Nasdaq 100 and S&P 500. IT sector is still the largest in both of these indexes due to decent outperformance of this particular sector over other sectors in last decade. But if we see the valuation cyclicality, S&P 500 is still better off. It has lower drawdowns as compared to Nasdaq 100, because Nasdaq 100 is more prone to any kind of valuation bubbles or crashes or any financial crisis. If you see the dividend and buyback yield, S&P is obviously offering higher dividend and buyback yield versus Nasdaq 100. In terms of geographic revenue split, both of these indexes offers very good diversification in terms of revenue, as they are completely diversified. So S&P 500 has this gate of profitability. So any company is generating profit, that only qualifies to be part of S&P 500, whereas in Nasdaq 100 there is no such requirement. Whereas in S&P 500 only US companies can be part of it, whereas in Nasdaq 100 it can be any company out there. So the objective of including other companies is to involve all the engines which are innovation or tech oriented. In terms of weighing mechanisms, both are obviously free float market cap weighting. The composition happens based on the market cap movements. So,
just to add, S&P 500 does have exposure to financials, while Nasdaq 100 is devoid of any financial companies. So, moving forward, why should one look at GIFT City based fund of funds as a mechanism to invest in S&P 500 or Nasdaq 100 indexes? This is a question that we have been receiving for a very long period of time now. And to reiterate on some of the points where investors face challenge, traditionally there was Indian mutual fund route through which one could have had such exposure, and that was probably the most simplest mechanism. Now, since that mechanism is very uncertain and closed, since the RBI $7 billion limit is the other way that clients can do it is by going on their own through foreign brokers or through Indian platform providers who again tie up with foreign brokers. This exposes the clients to various kind of risks. The investors are exposed to US inheritance tax if investing in US directly. There are complicated tax filings and all which are required for reclaiming of dividends and such things. GIFT City funds, as compared to that, one is the GIFT City funds are taxed at the fund level, which means whatever redemption proceeds that are coming to investors are after paying taxes, and so it is very easy for them. Whatever capital gains that are recognized are can be shown as exempt. Secondly, there is no exposure to any inheritance tax, or there are no complicated dividend filings or anything that is required. thirdly, if a client is looking to invest more than their LRS limits of $250,000, then typically for large family offices or such, there is a OPI route that is available for non-individuals through which they can transfer up to 50% of their net worth in GIFT City based pool vehicles, which can be this retail funds or AIFs. And finally, because we are doing things at scale, we are optimizing on all cost involved at all levels, be it brokerage cost, be it transaction level expenses for the clients themselves. And again, investing in a uh, investing through a foreign broker versus investing in a IFSC compliant fund, which which follows all the regulations as per the Indian taxation laws and is liable to answer in Indian to the Indian judiciary, is a significant comforting factor in itself when one looks at compliance and governance. So how are these funds structured? They are fund of funds, which means they'll be investing in other ETFs or UCITS linked to the S&P 500 index and the Nasdaq 100 index respectively. All payments have to be made in dollars. There are certain digital platforms through which we are facilitating this payments for certain banks. Uh, NAV computation for this fund, the face value is 100, but those who came in the NFO got $100 face value. Now, whosoever comes in will get the respective subscription NAV, which is displayed on the website. The NAV computation is on a daily basis. Now, daily doesn't mean that we are computing NAVs on Saturdays and Sundays as well, because this are also the questions that we have received in the past. There is a list of business days on which the NAVs will be published. Anyone can purchase and redeem funds on those business days as well. There's no lock-in or exit load for both of these funds, and the minimum ticket size for initial investment is $5,000. Minimum top-up additional investments can be $500 or anything above that. The expense ratios for the scheme are 30 basis points and 60 basis points for direct and regular. However, there would be, since this is a fund of fund, there would be an underlying fund in which will have its own expense ratio. So that we are saying that can be up to a maximum of 10 basis points for S&P 500 and a maximum of 25 basis points for Nasdaq 100. Now we have actually started investing this fund, so we know that this expense ratio of the underlying fund is meaningfully lower than the maximum range that we have given. However, in the first fact sheet that we published for the month of March, we will give out those specific details. This is the same for Nasdaq 100, the only difference being 25 basis points of underlying fund expense ratio. I think now I'll pass it on the call to Hema ma'am for giving a brief on the digital journey that we have started. Over to you, ma'am.
Thank you so much, Nirmal. And once again, thank you, investors and our valuable partners. I'm going to be taking you through the digital frontier, what we have right now and what will be coming in next. The way I'm looking at it is you should be keeping your focus specifically on asset allocation and not the administrative hurdles. So I don't really want our partners or our investors to think about a KYC, onboarding, what documentation, how will it happen, etc., etc. All you have to think is whether you want to invest in the global diversification and how much you want to allocate. So keeping that in mind, this was entire journey that we have designed. Now, as we move on from the physical to the digital journey, we will be having 3 sets. So I'm going to be talking about the retail investors or the direct investors. Their entire journey on the folio creation and onboarding is live. Next, I'm also going to look at the distributor partners. So just as we saw in the physical era, wherein the distributor partners were required to put in their allocated distributor IDs or ARNs that we say in the mutual fund world on the physical form. So we have made that live for the distributor partners as well. And the third thing that we would be talking about is going to be the distributor partners full application. So that will be coming soon. Kindly bear with us. By this, I mean the entire structure of how much are your clients invested and what is their NAV, etc. We would be giving you a portal where you can see all of it. Give us some time for that and it will be done. So these are the three bits on the digital frontier. So like coming back to the retail investors, we have zero friction onboarding, absolutely digital. You can create a folio in less than 10 minutes. In fact, I will be taking a demo for all of you all in the next 15 minutes or so. We will look at how a folio is created. You will also be given a folio number immediately. It's just that the folio has to be activated in our books. So that could take a normal 2 days, working days. So beyond that, you can invest everything online. So that's what we have done. As I said, the distributor partners, we are not going to be leaving you aside. We actually value our relationship. So what we have done for right now is we have replicated whatever is there in the physical form in the digital journey. So while your investors will actually capture the details, we have also provided a space for the investors to capture your distributor details. And so at the back end, we can work and provide you the required segregation. So that has been done. This is live. And third bit, which is not live yet, is the full application, which is coming soon. In this bit, we very clearly understand efficiency is your currency. So if you have to partner with us, if you want to sell our products to your investors, you want it to be an efficient product. And absolutely understand that. As I said, we will be having a dedicated digital journey in the next phase. You may also reach out to us for queries that you have on product benefits, So as I said, we are working on this. It could take about 2 months from now. In the meanwhile, if you have any product benefits that you are a bit confused on, or you need further details on how the onboarding works, you can gather your client insights. What are the clients wanting us to do? So you may do that background work while we are getting ready for your application. So as I said, we will be fully ready soon and we value your partnership. So with this, I will quickly take you through the specific myths or truths. We have done this basis the call that we had last time. So just before our NFO was starting, we had this distributor call and we have very much taken your feedback and provided you with this quick fact checks. Also, we have provided you with the tax FAQs, which are live on our website. So this is an outcome of your feedback. And yes, we hear you. So coming to the myths and truths, let's fact check. So myths versus reality. So a myth that you need a foreign or US dollar bank account for your city investments is a myth. In reality, the truth is you can use your existing Indian bank account, your INR rupee account, to make investments in our gift funds. Obviously, Gift City is an offshore entity, so the investments come to me in a dollar denominated collection account. So we have a journey whereby you can use your INR account, convert your INR into dollars, and that gets invested further. So that's a myth that has been broken. Next myth that we have is a lot of investors had asked us, do you mean complicated foreign tax filing? And is this, subject to a lot of returns, etc.? So no, foreign tax filing is not applicable when you're investing through GIFT City. So that's the truth fact. In fact, this is also there in our tax FAQs. Okay. We come to the next myth where we are saying RBI overseas limits block foreign investment. Well, yes, to that extent, as Nirmal covered, domestic mutual funds who were providing an overseas exposure. So that used to be the main thing that we started with at PPFAS Flexi Cap. We were giving you exposure to the global diversification. Because of the RBI limit that got blocked, RBI is not allowing foreign investing through the local route. However, you can invest through the GIFT City IFSC route and you can access global markets without being limited by the domestic overseas limits. So this is as good as being able to diversify your investments and come to GIFT City. Through that, you can do the needful. Yes, so there was a question, how much, people think that global investing is only for the ultra rich. So no, PPFAS has come out with this retail product. It's available for resident Indians who can start with a $5,000 ticket size. So that's another myth that is broken. Well, the question was, will the money will be locked in for redemption for weeks? Is there a lock-in? There is no exit load. There is no entry load. There is no lock-in. Redemption, if received, we will be processing within 7 business days. So that's something, your money is with you. As Nirmal said, whatever redemption proceeds come in, they're already tax, that is already post-tax. So whatever redeems is yours to keep. No further taxes on that. The next one, global investing has hidden cost. Well, creating a broker account and going through the requirement of filing, etc. All that is now gone. We provide the global access as a transparent mutual fund style cost structure. So Nirmal and Akshay already covered. We are taking the TER there and there is nothing more, no other hidden cost for it. Well, there is another myth which said GIFT City is just another way to invest abroad. Now, if you actually look at it, the GIFT City retail product that we have is tax efficient. It's free from the mutual fund caps. It is compliance light, so you don't really need to get into too much of compliance and tax filing as well. It's kind of a gateway for you to access your investments and you can have a global diversification done. So it's an important product for you to have an optimized route. Well, it's more risky to invest outside of India. So as Akshay rightfully mentioned, mitigating country-specific risk and economic cycles, your GIFT City retail fund is actually helping you do that. So it's a myth which has been, solved. So to end with this, I would like to say that, as we all know, each Indian has a LRS limit of 2,50,000. That's an annual limit which gets reset on the 31st of March. If you already have a folio, if your client already has a folio, or you want to create a folio and invest, 31st March is your deadline. You can use your unused limits now and make an informed decision whether you want to globally diversify your holdings or not. So we will be there to support. And if you want to come in before 31st March, most welcome. Or this is anyways a open-ended fund. So we are live, we are open for business. So most welcome, even if you decide to join us after 31st March. So with this, I would just take a quick minute to give you a demo of how the Gift City online investment is being done. And this is live, so I'm going to take you through our live website, and then I will quickly move on to our UAT environment because I will be putting in some dummy data for you. So it is I would actually request your undivided attention for the next 5 minutes, where we can just quickly surf through this particular option that we have created for all our investors and partners. Okay, so this is our gift.ppfas.com. This is my live website. I go to products. If you can see here, there is just above our logo, there is a button which talks about invest now. So this is where you can create. You can also come back to our you can come here into our products. You get into the invest now link and you start typing your email ID. That's a main identifier for you. So now from here, I will move on to our UAT environment. So here you just type your email ID and you proceed. Okay, we set a strong password, etc., etc. And this is my live. So I come to the UAT, and this is how, once you type in your password, this is how it will look. Now, I'm drawing special attention of my distributor partners here. In case you have a client, you can get this details fill in. So the first question is, are you investing through a distributor? Yes or no. If you are investing through a distributor, you will have to give in the distributor details. Please ensure that your clients, my distributor partners, please ensure your client types in your correct email ID and your mobile number, because during the physical era, we have received some applications with no email ID and no mobile number. So there is no way we are able to reach out to the distributors. So that's very important. If you are not investing through a distributor, it's a clear no. If you are investing through the distributor, yes. You move on. You have to put in your so this is only for individual investors. Non-individuals will not be covered through this particular digital journey. So you have an investor type, whether it's a joint or a single folio. You type in your details here. All your details, you will have a CKYC number. In fact, if you give it the correct CKYC number, all your details that is available on this will be updated. So once you update this, it will ask you for a joint holder. You provide the PAN number and you give in your mobile number. As soon as you do that, it will fetch your CKYC details. This is a dummy data, but you put in your PAN number of your joint holder, the date of birth and the registered mobile number. You get all the CKYC details here. Having said that, you move on and you talk about the mode of operation: single, joint, anyone or survivor. Single, as we know, single. Joint, important, please note, if you say joint, it requires signatures from all the joint holders. So preferable, anyone or survivor who can operate the account. So that's how it moves on. You come to the next slide where you will be given your address and contact details. Permanent address, put in your address, your alternate mobile number, your email ID. Once again, important investors, please give your correct email ID and your mobile number so that the statements are sent to you on that. If there is a problem, we reach out to you through your mobile. You provide the address, then you go into the bank details. Now here, one important thing, as we all know, end-to-end journey is only available for these three banks, HDFC, ICICI, Axis banks. Through this, you can actually pay your investments online with the click of a button. Other banks, definitely you can make an investment. It will be through an LRS automated dealer route. We will also take you through that as well. So here you'll get a message. In case you have one of the three banks, it will be very easy for you to finish your investment. Once you click on OK, you have to give in the IFSC code. Once you put in the IFSC code, all your details of your bank gets pre-filled automatically. So depending on the IFSC code, this is automated. You don't have to amend any of these. Your bank details are there. You give us your account number, account type, and you move on. If this is similar, if you want to redeem also into the same INR bank account, it is possible. In case you don't want to do it to the same invest subscript redemption, you can give us your second account number. So that's how we proceed with your redemption. Once you do that, you come to the fourth journey. Again, I'm giving you important information, similar. Three banks fully integrated. Your current bank is also a great option. We will take you to the LRS route. So a nominee details you put in here, date of birth, etc. We allow you three nominees, so a total of 100% or 50, whatever percentage you want. You can keep adding three nominees to your account. Once you provide the details, you come into the FATCA CRS declaration, which is a must, as we all know. Provide your country of birth, nationality. Obviously, we are only taking Indian citizens. Do you have any other countries for tax purposes? No. First joint holder, you have to give the details. Yes. I had taken only one joint holder, so my FATCA declaration is only for one joint holder. If there are three, you will have to provide for three. Once you've completed that, the last step is to put in your details. Now, as you see here, there is a small asterisk there, which is a mandatory field. Other documents are not mandatory. You can upload your details. Once you upload your details, it just clicks here and you review your application. And in next 30 seconds, you get your folio number, which is your prospect folio number. And that is with you for all your GIFT City investments. So right now, these two funds, later on, if there's another fund joining in, you can do so in the same folio number. So that's how it is. This is the journey that we complete here. Once you get the folio number, you can make a INR payments directly from your bank account. So this is online. Now I will take you back to our online journey. So we have invest now here, the link. And then we have an offline applicant pay here. So whenever we did the physical journey for all the investors, we also gave them an offline code. Now you can continue investing. If you have already invested, you can add in through this application directly. Or if you are a zero folio holder, you can still go and make the payment here. So now we will go to the payment journey. Now this is going to be a live data here, which we are going to be addressing. So I will just give you one folio number. This will be the folio number which you had provided during your physical document submission. So all the physical data is now digitized and we are here. You can make payment from here. Zero balance folio, please go ahead and make the payment. You send an OTP, it comes to my mobile number. Okay, now this is my mobile number. While you come to the new payment, separate transactions to be done for each scheme because it's a separate collection account. You decide whether you are S&P or NASDAQ, drawing the special attention of my distributor partners. In case your investor is coming through your client, if the investor is your client, you would go and click on the regular. If you're coming to our distributor partners, you please click in on the regular. If you're coming direct, you come direct. Once you click on the regular, it will ask you online or offline. Now, I will take you through both the journeys, online and offline. Online is for the specific 3 banks. So I do online. I say HDFC Bank. Now, look at this. Okay, I have $5,000. I get live exchange rate. So exactly here, I will get to know how much will be my INR debit to my bank account. Once you do that, you proceed to confirm. Okay, so this is how it works. You pay now. You click on you pay now, and it takes you to the website where you have to provide your bank account number. You look at this charges. So I had put in 5,000. It is taking 5,002. $2 per transaction is the Glomo fees. So this is where it starts. 94, 2 and 515. You enter your bank account number, re-enter your bank account customer ID, and you click in here. This is the declaration that I would request you to read once. This is more about your LRS limits, etc. So once you do that, you put in your details and you click on continue. Your investment is done. That's all it takes to invest in the Gift City world. Now I will take you back to the offline journey. So we will just do the offline journey once again. Will you bear with me? Another OTP sent. You verify your OTP, you make a new payment. This time we select NASDAQ, we come on direct to regular, we go to offline. Okay, now offline journey, you do not have these 3 banks. You go to offline journey, your transaction slip is almost pre-filled, but we allow you to amend. We say proceed to confirm. I'm on offline. This is the transaction slip that has to be downloaded, printed, and handed over to your banker. They will process the LRS for you. All the details that are required for your banker in terms of SWIFT code, etc., is very much available in this slip. So you say download slip. Your transaction slip is downloaded. You have the date, the folio number, and the name. You click on your class A or class B, but depending on whether you're direct or regular. Distributor partners, you have to put in your code over here. Important, please put in your code here, which is where we will be able to assign the transaction to you. You go to direct regular, we allow you to change the amount as well over here, whatever you want to make. You come down, you have a confirmation whether you're doing a transfer through LRS limit. If you have an overseas, you're doing it through a OPI, it can be done through OPI. That's for companies, non-individuals. And then you can also transfer through your foreign bank account. This is very important to remember. While you are doing INR or foreign bank account, if you're doing foreign bank account directly dollar to dollar, we also need your source of income or source of funds. So this is where you click in. Generally, it's an LRS transfer, so the first one is clicked. You sign this, hand it over to your bankers. Now, these are the details that your bank requires when they do a SWIFT transfer. So your Indian bank across or State Bank of India, any other bank, Citibank, HSBC, whosoever is not on this particular Glomo link, you have to give them this, the SWIFT code, my collection bank account, all of it comes here. That's all is required. Once you finish this, send this transaction slip, the signed one that you have, to us, and also give us a confirmation from the bankers that your bank account has been debited. Now, one last thing, if you want to use your LRS of 31st March, if your bank account is debited on 31st March, that is allowed. It takes about 2 to 3 days for the funds to touch our collection bank account because the collection, the conversion, all of it takes that much time. You will still be given the LRS benefit of 31st March. So that's the journey. So that's our journey live on our website. Get in touch with us or you invest now. So that's the demo we wanted you all to know.
Great. Thank you, Hima. Thank you, Nirmal, for taking us through the presentation, and thank you for the live demo. We have received quite a few questions which we have curated for you, and then obviously there are live questions. As time permit, we will also take that. So let me begin with you with the first question. Is there any partner application or web portal available where I can check my client's investment?
Yes, it will be there. We're working on it. Give us some time. All goes well with the transaction slips in 2 months. Yes.
Okay. Nirmal, this is for you. Given current elevated S&P 500 valuations, can the $5,000 investment be deployed in a phased manner over 6 to 12 months instead of upfront? Additionally, flexibility to fully deploy the remaining amount in case of a market correction.
So since the initial subscription amount is $5,000, anyone who is looking to deploy will have to deploy at the first instance the complete $5,000, and then they will have flexibility to deploy whatever additional amount as and when they feel like market corrections or on a monthly basis.
Okay, this is for you, Emma. I invested in NFO via offline process. When can I expect my account to be converted online and my holding visible?
So we have sent out statements to all our investors for investments that we have received through the NFO. As I said, zero balance folios can be visible on the portal, and you can go and make the payment. We will send out statement of accounts once the payment is done and the units are allotted. Yes, we are working on this particular requirement for online visibility, and that will be coming in few months.
Nirmal, I plan to invest 10 lakh outside India in current year. Shall I invest now or should I wait for PPFAS GIFT City active fund to launch?
I think that is very much a decision that the client will have to take on his own, whether he wants to invest in a passive fund or go up, wait for the active fund as and when it is launched. One thing that the client should, the investor should definitely take into consideration is the LRS limits reset as of 31st March. And it is not just the 2,50,000 US dollars limit, but also the 10 lakh rupees sub limit on which no TCS is applicable. So someone who is looking to invest right now, uh, as in if they have not done any LRS during the year, then they can invest right now up to 10 lakh rupees and will pay no DCS on that. And then if they intend to invest further, they can invest additional amounts in the next year as well. But on this very aspect of whether to invest in a passive fund or an active fund, that is a decision that the investor and their advisor would need to take on this.
Thank you. Nima, this is for you. Do we have any SIP options? 500 USD looks on higher side as an additional investment.
No SIP right now.
Nirmal, is the expense ratio of S&P 500 same as Nasdaq 100? Although yours is FOF, your TR is almost 0.50%, whereas POO is only 0.03%, and triple Q is 0.2%. Why are you keeping the TR way too high?
This is a very, very interesting question. So let me, instead of only answering the question that is there, let me expand it into three parts. There are three different things. One is an ETF, the other one is an index fund, which typically buys all the underlying constituents, and the third one is a fund of fund. Now, in our case, we are a fund of fund. In a ETF, what happens is uh, investors buy ETFs through their brokers. There is a brokerage commission that is involved. There is a holding cost that is to be paid by the investors themselves, as well as because the ETF needs to have liquidity, there are market makers involved who charge their own spreads over and above what is whatever the indicative NAV is for that ETF. So in such cases, since a large part of the overall cost is being borne by the investors themselves in different manners, the expense ratios of the ETFs can be very low. The index funds typically are somewhere in between, and then when because they take up all the expenses from the investors, and then when you are talking about fund of fund, uh, it is not just the expense ratio of the fund, but also the underlying ETF or the index fund in which that is investing. So that combined expense ratio, we have said up to 40 basis points for S&P 500 and 55 basis points for Nasdaq 100. Now this cannot be compared with a VO of 0.03% because that is an ETF, and even a QQQ is a index fund buying all the underlying constituents. If you compare, if you have to do a right sort of comparison for this, then the relevant funds would be the Indian mutual funds which are investing in S&P 500 or Nasdaq 100 outside. And if you look at that spectrum, the expense ratios there range from somewhere between 50 basis points to as high as 1.2, 1.3 percentage points. So as compared to that, we have tried to keep our expense ratios lower than that. Secondly, when you look at even the Indian mutual fund space, and when you look at 1,000 crore fund and a 1 lakh crore fund, the TERs for those would be very different, because obviously as you scale, the TERs will keep going down. So comparing, as we have just launched, we have a few $1 million in AUM versus someone who has billions of dollars in AUM, may not be the right sort of comparison again, because with scale, obviously the expense ratios keep coming down.
Just
So
to,
yeah.
just to add one more point on, in the domestic mutual funds, the TERs are charged on the rupee AUM, whereas in our funds, the TERs will be charged on the dollar AUM. So whatever rupee benefit of rupee depreciation will be there, there are two TERs on.
That's true.
Okay, thank you, Nirmal. So there are a couple of questions related to KYC and all, which we anyways have covered in the online demo. So Nirmal, the question is for you. Which are the specific usages or ETFs that you would be investing in? Or would you be constructing the portfolio by directing buying stocks or even go synthetic?
So we are not directly buying stocks. We are buying underlying ETFs or UCITS. Now my compliance officer here will not allow me to name those specific usage till the time we make a public declaration through our fact sheet. So hold your, I mean, we will come out with the fact sheet in the first 10-15 days of April for the month in March. We will be able to answer this specific question then very clear.
Okay, thank you. The next question is for you. I am an Indian resident and receive RSUs as part of my income. I'm planning to sell these holdings USD 1 lakh and invest in your funds. To avoid routing funds through India under LRS, I'm considering transferring the proceeds to a Singapore bank account and investing from there. Could you please confirm if this is allowed and what documentation is required? Source of funds, Form A2, etc.
So one, if as long as a person is resident Indian, um, the funds coming in from a foreign bank account of that particular person only, no third party transfers is allowed. And we, Imam just showed us the transaction slip. So in that transaction slip, there is already a source of fund declaration which says either LRS or OPI or foreign remittance from a foreign bank account. So the investor in this case will need to fill up, take the remittance from foreign bank account fees, and they'll need to fill the information on how they got access to the funds, which in this case would be sales process from the RSUs. That would be sufficient information for us to cover. There would be no additional documentation that will be required at this point of time from the investors.
Thank you, Nirmal. For the existing customer, what is the maximum investment limit, if any, in these outbound FOF schemes? And NAV information on daily basis is still not available on the site. Please explain the tax implication for investing in these schemes.
So as said, there is no maximum limit for any individual to invest in these schemes. The maximum limit if someone is investing through the LRS route is their own LRS limit of $250,000. But like we answered in the previous question, if someone has money outside of India, which is already outside the LRS limit, then obviously there is no limit to that. In terms of the NAV declaration and all, the NAV declaration has already started. Monday was the first day after deployment when we declared our NAV. So typically, because this is foreign investing, not Indian domestic investing, the markets open in the evening and they go on till the next day morning. So NAV declaration happens typically sometime during the next day. So Monday's NAV was declared yesterday in the evening. It is very much live on the website today. Yesterday's NAV will go live in a few hours time as well.
Thank you. Can NRIs invest in PPFAS GIFT City schemes?
At present, no. This is specific to outbound funds. So the outbound funds, because the taxation for the funds is at the scheme level, NRIs would be worse off investing in the schemes versus investing directly through some other mechanism. And so we are not taking NRI investors in this funds at present.
Okay. Therefore, again to you. What are the NAV cutoff timings compared to domestic mutual funds? Do I have to negotiate forex rate with my bank, or PPFS has a negotiated rate already?
So NAV cutoff timings are dependent on receipt of funds, similar to domestic mutual funds. The cutoff timing is 12 noon for us. So if your money hits our bank account by 12 noon, then we will consider it for the same day NAV. In terms of negotiation with the bank, there are certain banks with whom we have been able to negotiate rates. There are certain other banks where our partners have been, our payment service provider has been able to negotiate rate. So that if you are going through the digital payment interface, you'll get a rate which is better than the stack rate or the rack rate that the banks offer to you.
Thank you, Nirmal. Last question to you, Nema ma'am, from the curated list. What would the INR to USD conversion charge be? Does the investor give PPFS INR and you convert it to USD?
No, we're not the bank. So the conversion has to be done at the bank level itself.
Thank
So,
you.
yeah. So INR to USD, either you go through the LRS route or you come through the GLOMO route for the three banks. For the three banks, you will be able to see comparative rates on our website as well.
Okay, I'm moving to the live questions that we have received. We have anyways covered quite a few, which again has been asked here. So in the interest of time, we'll take the important ones. Nirmal, this is to you. Explain me concept of fund level taxation and impact on NAV for both short term and long term. Explain it by example if unit price happens to be USD 200 after 2 years of acquisition at 100 USD. How and what will be the tax treatment? USD 200 is inclusive after deducting tax. How the tax impact made? Sorry, it's a long question, but yeah.
I think rather than looking at the NAV of 100 and 200, let's look at the index levels. And basis that we can look at this calculations. So let's say the index levels are 100 at present, and over a longer period of if and someone is investing at the current level, we are taking that money and investing in the underlying UCITS or ETFs. Now, when the index doubles over a few years' time, the money that we had invested will also go from 100 to 200. Now at that 200 level, basically we on a daily basis compute what would be the long-term capital gains impact and the short-term capital gains impact for that. And basis that we declare the NAV. So the long-term capital gains impact is by considering 12.5% plus charges, which comes to 14.95%. Short-term capital gains impact is by considering the 42.74% maximum margin rate. So let's say so when the index is at 200, depending on the short-term NAV will be somewhere around 185 point something, 185 roughly, while the long-term NAV would be 158, the short-term NAV, sorry. So if the investor has effectively invested for a period of less than 2 years, they are going to get the short-term NAV. Because the corresponding taxes are very high. If the investor has invested for a period which is more than 2 years, then they are going to get the long-term NAV, which will be 185.
Okay, thank you, Nirmal. Is it possible to directly switch from S&P 500 fund to NASDAQ fund without a cash redemption?
At present, redemption is not, as in switch is not enabled. That is not possible right now.
Okay. Who would be the custodian registrar for this? Will we be able to generate statements?
Yeah, so the custodian for this fund is Kotak Mahindra Bank. The registrar and RTA, the registrar and transfer agents are CAMS, and the fund accounting is done by FX. So clients will receive statements directly from CAMS for their holdings on a regular basis.
Okay. Does PPFAS GIFT City work on Indian holidays? That is, can we initiate investment on these days except Saturday, Sunday?
No,
PPFAS, this is online. You can create a folio, do an online transfer on a weekend as well. The only thing is there is no phone support available on weekends for you to do so. And also, if you have to convert your INR to US dollar, it requires the bank to do the transaction for you. So while you can do the folio creation and everything online and remit the funds using your GLOMO link for the three banks, for everything else, you will be dependent on your banks. Just to let you guys know, during NFO on the last 3 days, that was Saturday, Sunday, Monday, we had a huge inflow of investments that was done online through the Glomo link using ICICI and HDFC accounts.
Thank you, ma'am. Nirmal, how are dividend distributed?
Basically, there are no dividends in this fund. There will be no dividend distribution right now, and we have not even kept a class in which dividend distribution can happen at a later point in time.
So just to add on that, we'll invest in the accumulating ETF. So the underlying ETFs also won't be distributing any dividends, and we'll also won't be distributing any dividends.
Okay, now we'll take the last question, ma'am. So mainly through the online demo and in the presentation, we have covered most of the questions that we have received. You mentioned NAVs are being published on their website. Which website can you share? So obviously we have said that.
Yeah.
Is the folio creation part you spoke about relevant for retail investor who already have a folio? Scheduled FA need to be included then in IPR. So the third question is more relevant.
Okay. So on our website, under the products, you click on to the specific theme that you're looking out for. Once you click on it, there is a whole NAV page there. Second, in terms of your IT return on the FA, we recommend capturing that as your foreign assets in your returns. And there was another one. Third question.
Yeah, that was like, is the folio creation part you spoke about relevant for retail investor who
Oh,
already?
yes, sorry. So, who already have a folio, so PPFAS mutual fund and PPFAS gift are two separate legal entities. In fact, PPFAS mutual fund is an Indian entity. PPFAS gift is almost an offshore, and we deal in dollars. So your folio at mutual fund is not same as your folio in gift. But if you've already opened a zero folio in our gift city, then yes, that is valid for all your investments through PPFAS gift.
Thank you, ma'am. I'll take one last question. This is
Yeah.
from the investor who has already created a folio with us. He is asking, can I make online investment? Also, I have SBI account which doesn't support online mode. Is IDFC bank allowed? Also, if I make investment through bank account other than bank details given during folio, will there be a conflict?
Okay, so quick one. So whatever bank account you have given while folio creation, as you go through your INR to dollar journey, you may think that this particular bank is giving you a better conversion charges. You can use that bank. Important here is both the bank account should be in your name. So your folio should be Miss Hema. Your bank account should be Miss Hema. It cannot be both ways. You should be the first holder. Okay. So if I have a joint account with Mr. A or Mr. B, it's allowed so long as I'm the first holder of that particular account. So it's allowed. SBI, you cannot do an online transfers. You have to fill in the LRS form, hand it over to SBI RM or at the counter and do the needful. In case you face any problem while you're converting your INR to dollars at your bankers, please reach out to us on our phones or on our email. We will handhold you through that transaction.
Thank you so much. I will conclude the call by thanking all our investor and partners who have joined the call today. Also to the PPFAS gift team for the presentation and the online demo, and everyone who have still joined in. Thank you so much. Whatever queries you will have, you can reach out to our gift team and they will help you. Thank you so much for joining in.
Thank you, everyone.